Welcome back to Talk Tickers, where we break down those earnings calls so you don't have to. Today, we're diving deep into Best Buy, their latest report, fresh off the Q3 2025 earnings call. Get ready, because we've got the transcript, we've got the stock moves, and a whole lot more to unpack.
Absolutely. We're going to go beyond just the numbers, see if we can really figure out what it all means for Best Buy, especially in this kind of crazy economic climate.
Yeah. So first things first, Best Buy, ticker symbol BBY, saw its stock drop almost 5% after the call. That's got to sting a little, right?
Yeah, that's not the reaction you want to see after a call. But here's the thing. Revenue was down just slightly, and they're still turning a profit. So that's a pretty, I think, solid sign of resilience, wouldn't you say?
I would say so, yeah.
Huh?
And there are some definite bright spots in this report. Laptop sales, for example, are booming. They're seeing growth like they haven't seen since 2021. What do you make of that?
Well, I think it shows that even when people are tightening their belts, they're still willing to invest in the tech that's essential for work and, let's be honest, life in general these days. The rise of remote work, I think, means that a reliable laptop isn't a luxury anymore. It's a necessity.
Right, like it's the new home office essential right alongside that ergonomic chair that everyone's talking about. And speaking of laptops, the CEO, Corey Barry, she highlighted how AI is becoming a bigger part of their laptop lineup. Apparently, nearly half of their premium Windows laptops now have AI features. So is this the start of something big?
It's definitely a trend worth watching. Is AI going mainstream? It's certainly possible, but we can't forget the basics. Best Buy's SVP Jason Bonfig pointed out that a lot of these laptop sales are still driven by good old-fashioned replacements and upgrades. People need machines that work, and with Windows 10 support ending in 2025, that's a huge potential market right there.
That makes sense. It's like, when your phone's about to lose software support, you kind of know you need an upgrade.
Yeah.
But hold on. Get this. Best Buy is also seeing a massive surge in sales of XXL TVs, like the ones that are over 97 inches. They're even throwing in free Geek Squad installation to sweeten the deal. Talk about a home theater upgrade.
Yeah, that's a really smart move by Best Buy. They're tapping into that desire for those premium experiences, right at home, and it plays perfectly into their strength, which is their service offerings. Plus, it shows that they're not afraid to experiment with those big ticket items.
Right. And it's like they're trying to refresh their image, too. They've got this whole new branding campaign about inspiring curiosity and discovery.
Mm-hmm.
Do you think they can attract a younger, more tech-savvy crowd with that?
It's a good question. It'll be interesting to see if that resonates. But Best Buy's not just about the flashy stuff. They're also experimenting with smaller store formats, expanding their outlet strategy to attract the bargain hunters, and even launching a marketplace. Wait, what? A marketplace?
You heard that right? A marketplace. That seems like a pretty big leap for a traditional retailer.
It is. It's launching in the U.S. next year after they saw some success with it up in Canada. Think of it like a carefully curated selection, wider range of products than they usually offer, all seamlessly tied into their existing services. It's a bold move, that's for sure.
So they're trying to walk this tightrope, right, between bargain deals and high-end experiences, all while testing out new store formats and expanding their online presence. That's a lot to juggle, even for a company like Best Buy.
It really is. But their biggest hurdle, I think, is that super competitive promotional environment out there. They even mention that sometimes even deep discounts aren't doing the trick.
Yeah, consumers are smarter than ever these days. They know how to hunt for those deals, so Best Buy has to strike that delicate balance between making a profit and staying competitive.
Exactly. And while their holiday sales have kicked off strong, they're not getting ahead of themselves. December could be tricky, with fewer shopping days this year and customers laser-focused on getting the absolute lowest prices.
Makes you wonder, what is going to be the hot tech gift this year? Will those AI laptops take off, or is it going to be all about those gigantic TVs?
Tough call. Those XXL TVs are tempting, I have to admit. But here's a thought for you to ponder, just for yourself. Best Buy is betting big on their membership program, and so far it's paying off. Could that be their secret weapon, to navigate the uncertainty ahead? And what does that mean for other retailers out there?
A lot to think about. And that's just the first part of our deep dive into Best Buy. Stick with us because we're just getting started.
Welcome back to Talk Tickers. Let's dive a little deeper into Best Buy's financials. I know sometimes these numbers can seem a bit dry, but trust me, they tell a story.
Yeah, they do. And sometimes those stories are more exciting than a blockbuster movie, especially when you're trying to figure out if a company's on the right track. So let's break down their Q3 performance. What stood out to you?
Well, the revenue in the U.S., their domestic segment, as they call it, dropped 3.3% to $8.7 billion. That's largely because sales in stores that have been open for at least a year, their comparable sales, were down 2.8%. Now, this is a key metric for retailers because it shows how well existing stores are performing, not just new ones.
So it's not just about opening new stores. It's about making sure the ones you already have are thriving. What about their international business? Any bright spots there?
Well, their international revenue came in at $748 million, a decrease of 1.6% compared to last year. That's mostly due to a 3.7% drop in those comparable sales we just talked about, and also the ups and downs of foreign exchange rates. A strong dollar can make things look worse for companies that are doing business overseas.
Ah, the joys of international finance, right? Always something to keep an eye on. But they did mention that those Best Buy Express locations they opened last year helped to offset some of those international losses, didn't they?
They did, and that's a good sign. Shows they're adapting, trying new things. Now let's talk about their expenses. Specifically, what they call non-GAAP SG&A. This basically covers things like salaries, rent, marketing, that sort of thing. In the US, these expenses were pretty much flat compared to last year.
Okay, so they're keeping a lid on costs, which is usually a good thing.
Yeah.
How did that affect their actual profit?
Well, keeping those expenses in check definitely helped to, soften the blow from that lower revenue. But their operating income, what they call non-GAAP operating income, still dipped by a tiny bit, just 10 basis points to 3.7%. Now, for those who aren't familiar with the financial jargon, a basis point is just one hundredth of a percentage point. So it's a very small change, but it shows they're not immune to the pressures in the market.
So it's all about navigating those choppy waters. And they seem to be doing, a decent job of it so far.
Yeah, I'd agree with that. They're being disciplined with their spending, focusing on efficiency. Plus, they're still returning value to their shareholders. Year to date, they've given back a total of $892 million to shareholders through dividends and share buybacks.
Okay, so let's gaze into the crystal ball now and talk about their guidance for the rest of the year. What are they expecting?
Well, they've adjusted their outlook for Q4 comparable sales to be somewhere between flat and a 3% decline. That's a pretty wide range, which tells you they're being cautious.
Cautious is probably smart these days.
Huh.
What factors are they taking into account with this guidance?
Well, they're looking at things like the shorter holiday shopping season this year, changes in the timing of big promotional events, and of course, the big wild card, how much consumers are actually going to spend. Remember, the economy is still a bit wobbly, and that can make people hesitant to open their wallets.
So how does all of that translate into their profit outlook?
Well, they're expecting their operating income rate for Q4 to fall somewhere between 4.6% and 4.8%. But there's a little wrinkle here. Last year's Q4 had an extra week, which boosted their operating income rate by about 40 basis points. So it's not a perfect apples to apples comparison.
Right. It's like comparing, a regular sized pizza to one with extra large slices. You got to factor in the difference.
Exactly. Now, when it comes to the full fiscal year 2025, they're sticking with their operating income rate guidance of 4.1% to 4.2%. That's pretty impressive considering all the, headwinds that they've mentioned.
It does seem like they're managing to stay afloat amidst some pretty rough currents. How are they doing that?
Well, they're projecting a 40 basis point expansion in their gross profit rate compared to last year. This means they're getting better at squeezing profit out of each dollar of sales, even if those sales aren't growing as fast as they'd like.
So it's all about efficiency and maximizing profitability even when the going gets tough. What about those pesky expenses for the full year?
Well, good news there. They anticipate their non-GAAP SG&A expenses, remember those general and administrative costs, to decrease by over $200 million compared to last year.
Wow, that's a significant chunk of change. How are they managing that?
Several factors are contributing to this cost reduction. First, they have one less week in this fiscal year compared to last year. Second, store payroll expenses are holding steady as a percentage of sales. And third, they're paying out less incentive compensation.
Okay, so they're being very strategic about, controlling those costs, even down to the smallest details. But they did mention they're planning to spend more on advertising this year. Why would they do that if they're trying to cut costs?
That's a great question, and it highlights a key point. Sometimes you have to spend money to make money. They're strategically investing in marketing to attract customers and drive sales. It's all about finding that right balance between, cutting costs and investing for growth.
Makes sense.
Yeah.
So we've covered a lot of ground here, delving into the nitty-gritty of Best Buy's financials. But what are the key takeaways for our listeners who might not be financial wizards?
I think the biggest takeaway is that Best Buy is demonstrating, resilience in a tough retail environment. They're not immune to the challenges, but they're staying profitable and focusing on smart initiatives that could really pay off in the long run.
I agree. Their focus on those services, especially their membership program, seems to be a real winner. It's not just about selling gadgets anymore. It's about building those relationships with customers and offering them value beyond the product itself.
Absolutely. And they're not ignoring the digital world either. Those investments in their online channels are paying off with more people using their app and buying things online. It's all about meeting the customer where they are.
I love how they're experimenting with those new store formats. It shows they're not afraid to try new things and adapt to those changing consumer preferences, whether it's those outlet stores, the smaller format stores, or even their partnership with Bell Canada for those Best Buy Express locations. Constantly innovating.
And let's not forget about that bold move into the marketplace arena. Launching a marketplace in the U.S. next year could be a real game changer for them, potentially opening up new revenue streams, bringing in a wider range of customers.
Yeah, it's definitely a development to watch closely. So much is happening with Best Buy. It's like watching a retail revolution unfold in real time.
It really is. And we're not done yet. Coming up next, we'll analyze what all of this means for investors and share our take on what to watch for in the coming months. Plus, we'll unleash our inner contrarian investors in our This Is Not Financial Advice segment with a trade idea that's so outrageous it just might work. Don't miss it.
Welcome back to Talk Tickers, and buckle up, because we're about to go beyond the balance sheet and explore the strategic moves Best Buy is making. This is where things get really interesting for me, because it's not just about the numbers. It's about vision, how a company is adapting to a changing world.
Yeah, you hit the nail on the head. We've talked about financials, but Best Buy's transformation goes way beyond that. They're focused on operational efficiency, making things run smoother for both customers and employees, and that can be a powerful driver of long-term success.
For sure. And they gave some cool examples on the call, like using AI to optimize the routes for their in-home delivery and installation trucks. So that not only makes things more efficient, but it also gives customers those live up-to-the-minute arrival estimates that I think we've all come to expect.
Yeah, think about it. That kind of real-time tracking is almost table stakes now. It's all about transparency and giving customers more control, which ultimately I think builds trust and loyalty.
Right. And they're using tech to streamline customer support, too. They've got this AI-powered virtual assistant that's handling a ton of their online chat inquiries, and they're even rolling it out to their phone system.
Makes it easier for customers to get help, quickly and efficiently. And by automating some of those routine tasks, it frees up those human agents to focus on the more complex issues. Win-win.
And they're also getting smart about using data analytics. They talked about using text analytics to create real-time alerts that flag potential operational or promotional hiccups. It's like having an early warning system for your business.
Yeah, that's a great example of using data proactively, not just to react to problems after they happen, but to prevent them, in the first place. It's like having a finger on the pulse of the entire operation.
And let's not forget about their efforts to revamp what they call their reverse supply chain, basically how they handle returns and open box items. They're opening more outlet stores, and they even launched a dedicated section on their website that brings together all their open box, refurbished, and clearance products.
Smart move, especially now when it seems like everyone's looking for a good deal, gives those products more visibility and gives customers more, affordable options. Plus, it's good for the environment, reducing waste and promoting sustainability.
Speaking of smart moves, let's talk about their partnership with Bell Canada to expand their presence north of the border. This seems like a textbook example of how a company can leverage its expertise to enter new markets and grow.
Absolutely. They've rebranded and transformed 167 small format consumer electronics stores across Canada, formerly known as The Source, in record time. That's impressive execution.
That kind of speed and agility is crucial in today's fast-paced world. So what's the big idea behind this partnership? Why is this a win for both Best Buy and Bell Canada?
Well, think about it. Best Buy gets to reach those smaller communities and malls, tapping into a whole new customer base. They're offering a curated selection of electronics and those popular Geek Squad services, while Bell gets to be the exclusive telecom provider in those stores.
Like a match made in retail heaven. Best Buy gets new markets, Bell gets to piggyback on their retail expertise and brand recognition, and customers get that one-stop shop for all their tech needs.
Exactly, a textbook example of a strategic partnership done right. Now, amidst all this talk about strategy and expansion, it's important to note that Best Buy isn't neglecting its most valuable asset. It's people.
That's right. Corey Berry emphasized how proud they are of their company culture and highlighted their low turnover rate, the lowest it's been in over 3 years. That's a big deal in today's tight labor market.
It is. It's a huge signal that people want to work at Best Buy, and that speaks volumes about the kind of environment they've created. They even mentioned that their employee engagement scores are through the roof, exceeding global benchmarks.
That's impressive. Shows they're not just focused on the bottom line, but also on creating a workplace where employees, they feel valued and motivated. It's about investing in your people, just like you invest in new technologies or store formats.
Well said. So, we've covered a lot of ground today. Best Buy's financial performance, their outlook for the rest of the year, those innovative strategic initiatives that they're pursuing, and even their commitment to their employees. It's been a deep dive indeed.
It has. So for our listeners who are maybe still on the fence about Best Buy, what are your final takeaways? What should they be watching for as this story unfolds?
I think the biggest takeaway is that Best Buy is demonstrating remarkable resilience and adaptability in a retail landscape that's constantly shifting. They're facing challenges head-on, but they're also making smart, calculated bets on the future. Their focus on services, digital enhancements, operational efficiency, and new store formats is a powerful combination.
Yeah, I agree. They're not resting on their laurels, that's for sure.
Yeah.
And their willingness to experiment, like with that marketplace launch, shows they're not afraid to push the boundaries and evolve their business model.
They're finding that sweet spot, between tackling those immediate challenges and making those long-term investments that could pay off big time down the road. It's a delicate balance, but they seem to be managing it well.
All right, so we've analyzed the earnings call, dissected the financials, explored those strategic initiatives, and even peeked into, Best Buy's crystal ball. But now it's time for the grand finale, the moment you've all been waiting for.
Oh boy, here we go.
It's time for This Is Not Financial Advice, the part of the show where we let our imaginations run wild and pitch a trade idea that's so outrageous it just might work.
Just to be clear, folks, we're having a little fun here, so don't base your investment decisions on our crazy schemes. Do your own research, consult a financial advisor if needed, and remember, we're not responsible for any sudden urges to buy or sell wrapping paper.
Exactly. This is purely for entertainment purposes. Now, are you ready for this? What if we short sell wrapping paper?
Short sell wrapping paper. I'm intrigued. Tell me more.
Think about it. Best Buy is selling all these massive 97-inch TVs, right? Those things are bigger than some apartments. They won't even fit under a tree. So less wrapping paper needed, demand goes down, prices plummet, we rake in the profits.
Okay, I'll give you points for creativity, but there are a few holes in this plan. First of all, people buy a lot more than just TVs during the holidays. There are still plenty of gifts that require wrapping paper. Second, even if those giant TVs can't be wrapped traditionally, people might get creative with oversized bows or decorative bags. And third, I'm not even sure there's a way to short sell wrapping paper.
All right, you got me there. Maybe not the most foolproof plan, but hey, a person can dream right.
Dream big, that's what we always say. But seriously, folks, do your own research, make informed decisions, and remember, what you hear on this podcast is for entertainment purposes only.
Absolutely. We're just having a little fun with the absurdities of the market. That wraps up another insightful deep dive here on Talk Tickers. We hope you found our analysis helpful, even if our trade idea was a bit unorthodox.
Until next time, happy investing.